Hey everyone, welcome back to Immortal Trader channel. I'm your host and today we are diving into a complete masterclass on mastering market phases and sentiment for smarter trading. This is the ultimate guide, combining everything from understanding market cycles to reading crowd psychology. Using tools like volume, open interest, chart patterns, and sentiment indicators. My goal is to give you a rock-solid framework so you will never trading blindly. Grab a notebook, settle in, and let's unpack this step by step. Why market phases and sentiments are everything. If you don't know the market's current phase, whether it's trending, ranging or reversing, you're essentially throwing darts in the dark. And if you can't read the crowd's emotions, fear, hope or greed, you're missing the real driver on price action. Trading without this knowledge is a fast track to losses. In this video we are breaking down the market into 8 key phases, exploring how to spot them, and layering in tools like volume, open interest, chart patterns, and sentiment indicators to make informed trade. By the end, you will have a system to trade with confidence, whether you're in crypto, Forex, or stocks. Let's start with the big picture. We can split the market cycle into phases. Some overlap, but treating them as separate chunks keep things clear. The first two come from Dow theory: accumulation zones, where smart money quietly buys, and distribution zones, where they sell off. At its core, the market flips between two states: consolidation, price range, building for a move, or trending, big directional moves. For example, imagine BNB stock between $202 and $221 for weeks. That's consolidation, likely accumulation if volume's fading. If it breaks out to $230 with a volume surge, you're in a trending phase. Knowing this tells you whether to buy, sell, or wait. Each phase has sub-stages: accumulation, markup, and distribution. Picture BNB dropping to $50 after a crash. News screams crypto's doomed, but price stabilizes in a tight range with low volume. That's accumulation. Pros are buying quietly, keeping price steady. Once they are loaded, volume dries up, and the markup phase kicks in as retail piles in, pushing price to $80. In distribution, after hitting $110, price ranges again. Volume drops and hype floats in. Amateurs buy, pros sell. When volume hits a low and the range breaks, the dump begins. These cycles repeat across time frames, but stick to daily or weekly charts for clarity. Confirming breakouts. Don't chase without proof. Now let's talk about Solana right now. It's trading at roughly 157 USD. Imagine 157 is consolidating between $142 and $155. The very first candle closing above $155 might feel like a breakout, but hold on, don't just jump in. Aggressive traders could enter immediately with a tight stop loss just below $157, a relatively small risk with high upside potential if the breakout holds. Cautious traders might wait for a 6 to 9% move above the range, meaning they would wait for a sol to push toward 165 to 170 before taking action. This gives more confirmation of strengths, and the super conservative crowd may hold off for a 14% breakout, targeting around 175, ensuring the move is real and not a fake out. Summary of a strategy: never chase the first breakout candle above a range. That's the fastest route into a potential false signal. Know your risk preference. Aggressive traders enter early with tight stops. Cautious traders wait for moderate confirmation. Super conservative traders wait for a full breakout. Let's talk about risk management. The core of trading, your entire approach depends on two things: risk tolerance and position sizing. The golden rule: always use a stop loss and aim for a minimum risk reward ratio of 1 to 2. You will hit stops hundreds, maybe even thousands of times. But remember, those small, controlled losses pave the way for massive wins. For example, a signal 20% gain on Ethereum can easily outweigh 5 small 4% losses. If you manage risk properly, write this down. Discipline always beats luck. Your roadmap to market moves. Chart patterns are like your cheat codes for spotting market phase shifts. They have two dimensions: internal, what the pattern itself naturally predicts; external, how the pattern fits within the broader market trend. Classic examples include patterns like the heads and shoulders, double tops and bottoms, or triangles. When you combine these internal signals with the external market context, you get a much clearer roadmap of where price might be headed. Chart patterns. Fresh example with today's market data is double bottom on BTC. Imagine BTC consolidating between $85,800 and $88,000. A double bottom is only valid if the price bounces twice near $85,800 and then breaks the neckline at $90,000. Don't assume confirmation just because price bounced twice. Wait for the breakout above $90,000 before entering. Since the candle failed to close above $90,000, the bullish continuation we were expecting didn't fall. Alright guys, as we come to the end of this video, I want you to really understand something important. What I shared with you today is only the beginning. We covered a lot of ground, but trust me, this was just the surface. Every signal idea I touched on today has layers, details, and practical strategies behind it. And here's the thing: if you stop at the surface, you will only ever scratch the market. But if you keep digging, if you go deeper, you will discover the real edge that separates average traders from the ones who truly thrive. That's why I'm not stopping here. In the other upcoming videos, I'm going to break everything down step by step, We will touch each concept, zoom in and explore it fully so that by the end you won't just understand it, you will know how to apply it in real time with confidence and clarity. So if this video felt like a lot, don't worry. This was meant to be the big picture, the blueprint. Think of it as the introducing to a much bigger journey we are going to take together. Stay with me, because in the next videos I will bring clear examples, deeper explanations and practical insights that you can actually use. And trust me, once you see the full picture, you will never look at the market the same as before. So, make sure to like this video, drop your thoughts in the comments, subscribe if you haven't already, and share this with someone who's serious about learning. The stronger this community grows, the more value we can create together. Stay disciplined and never stop growing. Goodbye.